This video is for information and entertainment only. It reflects my personal opinions and is not financial advice. Check the description for more information. Always do your own research. Hey guys, what's up? It's Alessandro. Welcome back to the show. So this is the show I wanted to make for a long time actually, but because Hype's been doing so well for so long, it's kind of always been up only, which has made it kind of hard to make because I don't just want to make things when the token price is up because people then tend to FOMO in at the top and, you know, make terrible decisions rather than just like thinking about how things can play out over the next, you know, few years or whatever. But the real question with Hyperliquid right now really is, are the tokens that are not yet released going to come online? Because that's the thing that really kills tokens over time. If you look at all the tokens from 2021 and 2022, etc., right, they kind of start off pretty well in the first year, maybe 18 months, they do really well. And then when the rest of that token supply comes online, bang, they're crushed. So that's really the question, but there's a lot of things happening under the surface that I think are worth bringing up as well. So is Hype overvalued at, you know, $12.5 billion FDV? The real question is like, is it going to be, are all the tokens going to come online? Is it going to be worth $53 billion is the question. Guys, it's really important. Do not take what I'm saying here and assume that A, it's absolutely accurate, and B, it cannot be wrong, and C, go and apply it without ever actually digging into some ideas, some research yourself. This is not financial advice. I get a lot of stuff wrong over time. This could easily be wrong. This is just my best interpretation of like the market today, given everything that I know. Okay, with that said, let's go. Obviously, like, in case you don't know Hyperliquid is an exchange. It's also a blockchain. Traders can trade these contracts on the platform that they pay a fee to trade. Hyperliquid takes those fees and it buys back the token. Revenue for Hyperliquid has been down, right? It peaked in Q3 2025, which is obviously in line with sort of like the Bitcoin high in October. But it has actually been down, right? Revenue has been decreasing ever since that point. Now, it's the crypto bear market, so, you know, fair enough. Crypto volumes are down across the board everywhere. But still, it's worth knowing, like, the revenue has been decreasing. The thing is, with Hyperliquid, the vast majority of their volumes now come from non-crypto markets. So you might be asking, okay, well, why haven't they been making much money? It's because they're non-crypto markets, these Hyperliquid Improvement Protocol 3 markets, these HIP3 markets, have been in this thing called growth mode, where their fees have been 90% cheaper than they otherwise would have been. Now, this has recently been turned off. Well, actually, rather than being turned off, whoever's deployed the market, if it's oil, if it's, you know, the Korean stock market, if it's Samsung, whatever, they can now choose, what do they want to charge? Do they want to charge 10% of the normal fee? Or do they want to charge 3x the normal fee? So there's like a sliding bar they can choose. They can charge a little bit less than, or a lot less than normal, or they can charge 3x the price that, you know, Hyperliquid charges for their own markets. We're going to see how that sort of plays out. My expectations are that the sort of like niche markets, you know, the pre-IPO markets are going to cost a bit more to trade. And the ones that have a lot of volume, the NASDAQ, the S&P 500, they're going to trade probably at a similar sort of price to where they're trading at right now. And with Hyperliquid's valuation, right now it's clearly being priced as an exchange. And these are the sort of like world's top exchanges, you know, the CME, NASDAQ, Robinhood, etc. And the average of like where these guys trade at, you can see that basically like if there's a lot of revenue growth, they're going to trade at a higher multiple. If there's not much revenue growth, they're going to trade at a low multiple, to be expected. But the median of those is about 22x, right? So maybe it's fair to say Hyperliquid should trade roughly at 22x. Maybe it's more towards that Robinhood side because the revenue growth is sort of like, is there, you know, they're bringing new things online, whether that's fees from priority fees have been recently been increasing in Hyperliquid. They've also got this new fee structure from Circle. So any USDC that lives on the platform, they take the revenue from, well, like 90% of the revenue from those deployment of dollars on the platform. They're clearly incredible at thinking of new ways to make more money. I mean, that's essentially what businesses need to do. They're doing that very well. It's clearly not being priced as a chain. Okay, so Hyperliquid is a chain, just like Solana, Ethereum, BNB, etc. But it's clearly not being priced like one. You know, you could say that's right, you could say that's wrong, but it's not right. Just like evidenced here, those sort of things get priced at 100 plus their revenues. Ethereum is close to 900, you know, more than 900 times its revenue. Hyperliquid is much, much lower than that, depending if you take the market cap today or the FDV between 50 and 12x that number, which is obviously much, much lower. Also, Hyperliquid takes in the vast majority of on-chain fees across all of crypto, right? So it keeps about 11% of all the money that protocols make in crypto. I mean, that's an enormously high figure when you think that it only trades at 0.6% of the market cap of all those tokens. So if you add up all the market caps of all the tokens in crypto, and then you also add up all the money they make, Hyperliquid makes about 11.5% of all the revenue, but it only equates for about 0.6% of all the market caps. Now, if it was fully diluted, i.e. all of the tokens were online, that number would be up to about 2.7. Again, interesting data, right? As I said at the start, the real question is, right now there's about 730 million tokens that are unreleased. This is the key question. When are these tokens going to come online? Are these tokens going to come online? If you look at the tokenomics for Hype right now, basically there's a bunch of tokens, about 40% of the supply is reserved for more community rewards. Whether that's staking rewards, a future airdrop, used for incentivizing usage in the future. These tokens are to be decided what's going to happen to them. If they all come online tomorrow, obviously all the buybacks that they've done basically become, you know, largely irrelevant. The other large portion of supply that's yet to come online is the tokens for the team. And you can see here that the team basically were allotted 9.9 million tokens a month, and they've been taking like under 500,000. So again, it's like pointing in the direction of this team are very, very aligned with the token, and they understand that they bought back a bit more than $1 billion in the last, you know, year, bit more than a year. And so if they just release 9 million tokens onto the market each month, it's going to really affect the ability of them to buy back those tokens. It's about 20 times more than the amount they're buying back each month. They understand this, right? And so normally you don't get such alignment between the team and the actual like tokenomics. For what it's worth, it suggests these guys are in line with the token. However, these buybacks that the team are doing, right, or Hyperliquid, the protocol, is doing, gets hit two ways. The more expensive Hype becomes, the less impact they have. And revenue's been going down over the last few quarters anyway. So again, it has less impact on how many they can buy. So just look at this. This is a chart that says, look, they were buying 2.5 million Hype a month, and now they're only buying, you know, just under 600,000 Hype a month. So massively reduced amount of Hype being pulled off the market as token price goes up and revenue goes down. Of course, those two things could flip. This actually works in reverse too. The lower Hype goes, the more they're buying. This is often the opposite to what's normally true. Normally what happens is the lower price goes, the less supported price is. But in the case of Hype, right, the lower the token price goes, the more the assistance fund sort of supports price. So it's an interesting dynamic. When there's no buyers, they'll buy more. When there's more buyers, they'll buy less. It's kind of like a dynamic DCA sort of thing. But buying back shares, stock, tokens isn't like a new thing, right? This is one of the reasons why Apple, Meta, Nvidia, etc. were so successful in 2025 and 2024. They were pulling equity supply offline regularly. Now, these guys have now decided to spend that money on CapEx, which is one of the reasons why the Mag 7 have been much worse performers over the last 6 to 9 months than they were in 2024 or 2025. They went from supply grabbers, so they were pulling supply offline, to adding equity supply to markets, and, you know, even adding bonds and issuing new equity. And how that compares to Hyperliquid, right? So like Hyperliquid in 2025, basically, Hyperliquid within the last year have pulled off about 5.9% of the supply of the circulating supply, right? Only about 1.5% though of all the shares, of all the tokens that could ever be released. So in terms of all the tokens that could ever be released, it's actually quite a small amount. The other thing to consider is that like this perpetuals area, this perpetual space is very competitive. You've had a bunch of tokens, a bunch of projects launch and capture market share from Hyperliquid. Aster captured a lot of share for a brief period. Hyperliquid's fought them all off, yes, but you would imagine it's going to continue to have to fight these things off. The other thing is that even though the team's monthly release is 20 times lower than it could be, it's still making up about 75% of all the tokens that are being bought back. So these buybacks really are making very little difference anymore in reality. But as we said before, Hype is priced absolutely as an exchange. And if we were pricing it on that multiple, that 22x median multiple, on the amount of tokens that are in supply today, it would make it worth about, $92. But if it was priced upon that multiple based on all the tokens that could come online, then it's only worth about $21. So it really depends on how many of these tokens are going to come online over the next 5 years, 10 years, 20 years. And that's the real question. The vision for Hyperliquid, right, is to be the house of all finance. And I guess what the being the house of all finance is, as far as I can see, is being a place where you could keep your spot crypto, your long-term investments, whether that's equity tokens, so the S&P 500, or maybe shares of Apple, a place where you can, long oil, all that sort of stuff. Of course, half of those things are already there. Spot stocks are obviously not, but also be a bank. Like this is a place where you can hedge positions, you can earn interest on whatever it is you've deposited into the platform. These are the sort of like long-term goals, right? And obviously that would be a pretty good thing to be. But today, what Hyperliquid is an exchange, right? And it's being priced as such, and it needs much, much higher volumes. It needs to go back to those at Q3 of 2025, etc. rates of revenue to really start showing it's going to grow in that market. And at its current valuation, it is priced that these tokens are going to be released slowly, and that regulation is going to stay somewhat lenient towards it. If suddenly regulation comes out that basically bans Hyperliquid in the US, you can bet it's going to definitely struggle. Now, that's not to say that it has to struggle. Binance obviously very famously doesn't reside in the US, but Hyperliquid have a team in Washington trying to bring positive regulation for perpetuals anyway. You would imagine if that kind of fails, well, they're going to take a big hit, right? In terms of the things they're trying to do, they've added USDC revenue from the USDC that's on the platform. Maybe I can see a vision of a world where that yield gets redistributed to people who are leaving their USDC on the platform. There's lots of ways that they can try and incentivize more users to come on board, all that sort of stuff. But right now, really, it's priced so that all of the tokens are not going to be released over the next 2 to 3 years. And if they are to be released over the next 2 to 3 years and revenue does not grow and volumes don't grow, well, it's definitely priced too high, even at today's 25% off the highs valuation. I do think, though, it is worth considering if you're in crypto, right? Then, I just sort of think about it this way. How can you be bearish? The one thing that has absolutely turned crypto around in terms of saying this is the way tokenomics should be structured. This is the market we're going after. We're applying all that value back in to the token. They already make more money than anything if it exists on chain consistently over the last year. That's likely to continue. They're about 12% of all the revenue that happens in crypto anyway, and they're only valued right now at about 0.6% of those tokens. This excludes Tether, Circle, and Bitcoin as well, for what it's worth. Obviously, if you include Bitcoin in this, then this number shrinks by 50, 60%. But the point remains, I think it's hard to be bearish hype if you're bullish crypto, right? If you're bullish that on-chain is the future, then I mean, the bets are relatively easy. Anyway, for now, this doesn't really price in, this like valuation square here doesn't really price in all the future growth that could happen. If we are going to see $100 trillion tokenized and put on chain, and Hyperliquid is a venue where all those positions are hedged, I mean, it's interesting to think what it could be worth at those levels. At the end of the day, everybody's got to like think through theses themselves and try to come up with ideas that they think are okay on a risk-adjusted basis. Anyway, guys, that covers it. Thank you for watching. I shall see you in the next one. Ciao, ciao.